very happy to see you all here because today is Friday and only then we have the UK retail sales. Once again, hello everyone! Yay! It was the intro to my greeting. Hello, my name is Paulina. In case if you haven't known it before, me and my colleague Michael, we are going to discuss the UK retail sales, which will be out in about 10 minutes. And yeah, congratulations because it's Friday today. It's a wonderful sunny day outside, and at the current moment, the forecast for UK retail sales is not so sunny at minus 0.3%, whereas the prior figure stood and, by the way, still stands at 1.7%. Talking a little bit more about the economy, so bouncing back from October's poor performance, retail sales, including and excluding fuels, rose a marked 1.7% in November. In December, market expectations again point to a notable deceleration. Sales volumes, both excluding and including fuel, are seen declining 0.3% on a month-on-month basis. The most recent survey from the British Retail Consortium, which measures sales values, said that the end of last year, due to a disappointing close for retailers, which December seeing just 1% sales growth, despite the strong underlying momentum of an improving consumer environment, buoyed by rising real incomes, low inflation, and lower unemployment. According to the Confederation of Business Industries, the overall balance of sales volumes picked up pace to 19% in December, up from 7% a month ago. The CPI survey of as many as 118 retailers showed a prolonged Black Friday shopping spree, and promotions were among the main upward drivers, with external internet sales volumes rising at their quickest pace since April last year. The pace of growth is expected to hold broadly steady in January, according to the CBI. Okay, let's move on. And here you can see the top 10 economists surveyed on the matter. The matter definitely of UK retail sales month-on-month data, and according to their views, we have the Bloomberg survey summary, where the median estimate stands at minus 0.3%, average estimate stands at minus 0.1%, high estimate stands at 1%, and low estimate stands at minus 1.1%, whereas the number of estimates this time has reached 21. Right now, I would like to show you the Dukascopy community members poll, and the votes divided as follows. So we can clearly see that there are much stronger bullish sentiment on the sterling dollar this time, 56.03% versus 43.97%, and we have a couple of comments from our community members. For example, Sonia is expecting a bearish impact, and she believes that December is usually a good month for retail due to Christmas, but the UK low inflation will affect the sterling adversely, despite retail sector showing consecutive increases. And D1V1 says that sales are expected to drop. One of the reasons is the festive season, which just ended, and he expects that to give an upstick to the UK sales, but a bullish impact on the pound greenback. Okay, I still have something else to say. However, time is running out, and I believe right now is the best time again to invite Michael on the whiteboard with the technicals, please.
Thank you, Paulina. Hello, everyone. So I'm basically gonna support what you just said, since I've chosen the positive surprise trading strategy, expecting the cable to go up today, hopefully. And the market sentiment for the given pair is rather bullish, same as on Wednesday, almost same as on Wednesday. 66.73%, with the sterling being bought in 62.92% of all cases, and the US dollar being sold in 54.85% of all cases. Both in the 50 and 100 pip range, the majority of all pending orders remain to sell the sterling. In the 50 pip range, it's 64.71%, while in the 100 pip range, it's 59.42%. Other market participants also retain their bullish prospects towards the cable, with Orenda having 59.91% of traders holding long positions. Sector group is rather close to the equilibrium, but still the majority of traders are bullish on the British pound, namely 53.67%, and daily FX also has a rather strong bullish sentiment of 71%. So, if we move to the market reaction table as usual, which shows us the reactions that the cable had during the previous 5 retail sales releases. The largest one was 52 pips and the smallest one was 21 pips. So the approximate average we could expect today is 31 pips. However, we also have the public sector net borrowing released at the same time, which could have a stronger, which could impact the reaction to make it either stronger or slightly smaller, depending on the results. And so, if both data turn out to be better than anticipated, we could see approximately 40 pip reaction, maybe even higher. We're going to focus on this one right now. So, based on this reaction, we set the take profit and stop loss levels accordingly, with the take profit level located currently at 1.4301, which doesn't have any other strong level to bolster this resistance. However, we do have a trend line somewhere even higher, I'm not going to skip all that way, which implies that the cable has been in a bearish trend since the middle of December, and it hasn't quite yet exited it. So even if we do see a reaction to the upside, it's still poised to go later down, as by the way the daily technical indicators suggest. But nonetheless, the stop loss level rests at 1.4239, where we have the 4-hour R2 close by and the 55 period simple moving average, as well as maybe the 4-hour R1, which are bolstering this support. So this is quite a strong area to limit the losses in case we do see the data worse than the forecast. So moving into the technical indicator table, as you can see that the indicators are rather mixed, with the bullish signals in the 10-minute and the hourly time frames, while bearish are in the daily and the monthly one, and also mixed in the 30-minute, 4-hour and the weekly ones. But as usual, the most important one is the 30-minute time frame indicator, since it was updated specifically for the data release, and it's unfortunately giving us mixed signals. So we might see a mild reaction or maybe no reaction at all. But the hourly ones are actually giving us bullish signals, so there is a possibility of the pair still going slightly higher, which we will see in approximately 20 seconds. And just quickly, I would like to mention some of the Bloomberg survey forecasts concerning the retail sales. The BNP Paribas expects a minus 0.5% result, which is worse than the forecast, while Commerzbank expects a 0.9%, which is slightly better. So most of the forecasts were rather mixed as well. Concerning the public sector net borrowing, they were also mixed, and unfortunately we do see a reaction to the downside. Your retail sales is significantly worse than anticipated, and the public sector net borrowing as well. So we've seen disappointment in December's data, but the reaction is only 23 pips, at least for the time being, we haven't reached the stop loss level, as the first support cluster of the 4-hour R3 and the 20-period simple moving average managed to prevent the pair from falling deeper. And that will be all from my side, and back to you, Paulina.
Well, yeah, that's a little bit...
Sorry, just a second. I actually mixed up the... we didn't have the public sector net environment data in the chat. I mixed it with the core retail sales. Yeah, that's what I wanted to add. The public sector number actually turned out better than anticipated, hence we, even though we've seen a reaction, it was currently trading flat. So back to you, Paulina.
Thank you, Michael. Wonderful analysis. Yeah, guys, I guess that's it for today. The numbers are as such. You can still see also the reaction on Michael's screen, and that's pretty much it on our side. Thank you very much once again, and we'll be back very soon on the 12 GMT research webinar. We're going to have a Fun Friday quiz and our traditional topics as well. Meanwhile, take care and see you very soon.